Happy New Year, Carlos.
Happy New Year to you too, man. I checked the subscribers and they're all still there. Everybody made it.
Well, the growth stocks might not have, so we're going to talk about Chargepoint soon. But first, we become official. We finally have grown up as YouTubers and we have a Patreon, just like, I guess, every other YouTuber. But still, ours is better, right?
The best. As our investing is becoming more successful for us individually, along with the growth of the channel, we felt like this was the right time to do this.
So we have a Patreon, we have some merch, and we have a Discord server. So those three things, Happy New Year. This is all belated Christmas present to everybody.
There's 4 tiers.
4 tiers, right. Supporter, fan, super fan, and for the guy who's serious, the investor.
The mega fan. So what does somebody get if they sign up as a supporter? $1.69 a month. What do they get?
So at the supporter level, you are basically hooking us up. Me and Carlos can afford a cup of coffee that month, and we get to split it, not even a full cup of coffee. You get half, I get half.
I get the bottom half, and I'll have to drink through yours to get to it.
Basically, it's a way to support us, and you will get notifications of videos first dropping, and you're going to have access to a Discord server. Here we have a breakdown of certain stocks we're following, and we're still filling it out. So this is the beginning of it. It's not the full list yet, but some things that we're going to be talking about is just ENPH and Tesla and Very Good Butchers and Zillow, like those kinds of stocks. And some tiers have a little bit more access, like the trades and stuff.
So the fan tier is $4.99 a month. It gives you everything that you get for the $1.69 a month, including the cup of coffee to Vitaly and I. You'll also get early access to some of our videos. We'll also have exclusive videos that we're creating for these fans. We also will have some exclusive Q&As. We're also going to try something new that we're calling the morning brew. A lot of times Vitaly and I get on the phone in the morning and we just have conversations about news, or we have an idea that we want to discuss on the channel. We're going to be recording those conversations and just putting them up on Discord, and you'll also get notified when those things drop as well. At the $4.99 level, you're also going to get access to an exclusive channel on our Discord. We're going to consider it sort of like a Patreon lobby. General information. This will at least be a way for you guys to communicate directly with us on Discord.
The super fan level, which is $9.99 a month, it's going to provide some serious value. It's everything from the fan tier and below it, of course, but you're going to have access to direct downloads to our spreadsheets and projections. Anything that we talk about on the channel that's like a PDF, an Excel file, or whatever, we're going to put it into the channel. Access to private live streams and Q&A. So me and Carlos will do private live streams about certain stocks, and you guys will have direct access to that because you're in this tier. The other two things that are amazing, our Discord server, you'll have actual trades that we make. We have started populating trades. If you're interested in our portfolios and what we're buying, Carlos looks like he's buying some Spotify and PayPal here, and you're going to get to follow us and see if we're actually any good because we've been talking for 2 years and maybe you think we're no good, but I'm going to tell you, we're doing pretty well so far.
We're doing pretty well. For $9.99 a month, you can see the receipts.
The last tier is the investor tier. Carlos, take us through it.
This is the baller tier. This is the information that you really want to help you invest better. You get everything from the superfan tier and lower. You get a private Discord server to discuss new topics that we should cover for investor tier members. This will put you in touch with the other investor tier members along with us that will help us guide the future of the channel. You also get private Discord discussions on new stocks that we're tracking in our research. A big bonus of this one is to post your portfolio or stock pick, and monthly Vitaly and Carlos will have a look and give their opinion. Now remember, we're not giving financial advice, but if you are an investor, the chances are you have other friends that are investors. This is a chance for us to get to know each other better and actually look at specific stocks in your portfolio that matter to you.
We might do an actual recorded episode with the person who wants to discuss their portfolio, and that'll only be for the Patreon members who are in this investor tier. It's not going public. So if you were afraid your portfolio would go public, it won't. It'll stay within the investor tier members.
Right.
And if you want to just keep it private, then you are able to message us privately as well. Okay, so that was the whole Patreon spiel, and we hope someone can at least join us somewhere, even at the $1.69 level. We would really appreciate it. And so thank you very much for supporting us for 2 years now.
Even without signing up for anything, we really do appreciate the support that we've gotten over the last couple of years. It has been the thing that has motivated us to keep doing this.
Oh yeah, it's all the comments, the feedback, everybody talking to us.
Good and bad, even the trash talkers.
Oh, even the trolls. You see the way I respond to you guys. It's like a whole page.
Wow. In addition to that, we also felt that it was only fitting to finally bring the green beanie to life. As you can see, we have created a full-on merch store with our flagship product.
A green beanie.
The green beanie is real. We have shirts, t-shirts, mugs, cups, thermoses, hats. I mean, you name it, we've got it. So definitely want to grab some of that freelance finance swag while it's up.
So guys, we hope you join us, of course, because we started this Patreon, this Discord, and the swag. So it's going to be a good year.
Yes, we'll put a link up in the corner and there'll be a link in the bio as well.
So today we're going to talk about Chargepoint. And the last time we talked about Chargepoint, I said some negative things about it. They are still having a rough time of getting to their valuation. That's really the problem. Like the company is doing a lot of great things, but the valuation has always seemed a bit high.
We're looking at a company that's a $6.3 billion market cap
right now, and I'll go into why it's too high, but it's a good long-term play. So I'm both bearish in the short term and bullish in the long term. Short interest is surprisingly only 11%. The price of sales is kind of crazy. I would have thought, just like FUV and some other companies we've been tracking, that the short interest would be higher, but it's not, which is maybe a bullish sign. I don't know.
I take that as a sign that even if people are somewhat bearish on this particular company, the overall sector, they know it's only a matter of time
before it takes off.
Before it takes off.
This is one of the main problems I find with Chargepoint. Tesla has a supercharger network of over 30,000 stations. So remember, these are all superchargers, not the level 1 or level 2. Chargepoint, while they have a lot of ports, which they count as 163,000 total ports, like where you plug in, they only have 11,000, a third of Tesla's supercharging network type ports. This is the charging infrastructure. Why don't you have more than Tesla? And you've been building also for a decade. Like, why aren't you doing this a little bit faster? You are literally, that's your whole job, is to make these things, and you have Tesla eating your lunch, producing more of these than you are. And in fact, EVgo is also sort of ramping up really fast on this as well. So you're talking about all these competitors are coming in to compete with Chargepoint. So that was why I was a little bit more bearish on them.
It always ends up being like, why not just buy Tesla?
People are going to hate me again for talking about that Chargepoint is not going to win everything. Fine. I'm looking to buy Chargepoint, but it has to be at the correct price. This is in a downward trend. So anyone who thinks this is breaking out anytime soon, we've got a long time to play out. Even if it stays at this price, if it holds the 18 bucks, July 2022 is possible that nothing happens till then. Like, it's just bleeding until then. Chargepoint feels like it wants to go into this range, and that's where it's probably a better buy to scale in between $14 to $16, because it did have in the beginning some support here. So I figure we might get here if the market continues to just hate on growth stocks. That might be the best time to start scaling into Chargepoint.
This stock is what we're seeing in a lot of these other tech stocks, especially the SPAC stocks that blew up last year. They are all erasing all of their gains. I mean, literally just erasing all of their gains. Can you do a ruler from the bottom of the channel there at 1952 to the tops and see roughly what these gains are on these little peaks and valleys? 46% increase. What about the one before it?
83%.
So you're looking at 83% in 49 days. It's been a fun stock to play with, especially if you're riding this channel up and down. You can expect that, what is that? It looks like in another 40 days or so, you can expect a 25% jump back up to this downward trend line.
Let's look at the peaks from here to here. That was 190 days.
190 days.
And the next one was from here to here. That was 142 days. So let's say next one's 100 days.
March.
Somewhere around here, and it would be around $24, $23. So there is a short-term thing, like you were saying, that could be done, but I don't know. Like, I wouldn't risk it, me personally, because like there's so many other good stocks that are profitable.
What you're seeing now is the reaction to the Build Back Better being canceled. The momentum that EVs had going was just deaded in its tracks.
In the interim, someone going all in to Chargepoint has to understand that they might be sitting here sometime middle of next year. And I'm not saying don't buy any shares. You can be accumulating. Look, if a stock is trading sideways and it's hitting up against its resistance and it's failing multiple times, eventually it actually breaks down. So I would scale in still at around the $16. And I've been saying this for like 6-7 months since our last video, that's probably where I'm going to start scaling in at under 16 bucks. So this is a big if, but if you believe in charging infrastructure, Chargepoint is a big player that eventually, even no matter where we are here, eventually I do see us going higher, but it's going to take a bit of time, and people are going to have to be patient about it. Let's talk about valuation for a minute. They are worth 6.31 billion, short interest 10%. Yes, not profitable. Look at the price to sales. It's 21. Okay, so here's a price to sales of 21.37 for a company that's not profitable. Now I'm going to look at some profitable companies like ENPH and Tesla, of course. Price to sales around 20. Tesla around 25. This is my point, that if ENPH is tanking and Tesla might tank, who knows if it happens, and they're lower price of sales and they have better growth and they're making money, and I have, let's say, $1,000 to put into one of these things, it's probably better to say, like, put in 80% into Tesla and ENPH and maybe 10-20% into Chargepoint.
This is not a company I think you're investing in because of the fundamentals. You're investing in it because you believe in the space. You look at the market cap and you still think it has a long way to go. If and when the EV adaptation has finally taken over. For me, I'm saying what I would want to see are some good contracts, some good long-standing contracts with with a lot of orders on them, a place for them to expand those contracts, right? As well as get new contracts, because the only way to get to 12 billion, 15 billion market cap is if selling this commercially. Then it's not going to sell enough of these hold'em charges. Maybe I'm wrong.
ChargePoint is having revenue. They are growing their revenue. So that's important. They're not like failing, like Very Good Butchers. I'm sorry, I had to give that little knock to Very Good Foods.
Well, they could be growing their revenue and reinvesting the money back into the company, which is at this stage what you would want to see as an investor.
It's obvious they're growing. Look, they have this network charging systems, and we'll describe that in a second. Subscriptions and others usually like EV credits and some other stuff, but it is moving up.
If you're overall bullish on a company that you're bearish on short term, that's your time to buy. That's
you accumulate. You accumulate.
That's your time to buy.
The CEO is called Pasquale Romano, just so everybody knows that's the CEO. As I stated previously, our success is tied to the arrival of electric vehicles. I like the way he starts us right away because he's saying, look, this is not the best we're losing money.
He's saying we are dependent. Look, we make charges for electric vehicles. So obviously we need more of these vehicles on the road.
So in this quarter, we saw continued momentum in EV sales in both the passenger and fleet categories. Our Q3 revenue of 65 million was at the high end of the guidance range we provided on September 1st. This positions us to raise our expectations for the fourth quarter and full year, despite what continues to be a dynamic supply chain environment. So they're actually raising their the guidelines for Q4. We finished the quarter with approximately 163,000 network ports. I think that just means the connections. It doesn't mean location. And the management inclusive of both acquisitions. They actually acquired companies. Within the European port count was approximately 45,000. And globally, the DC fast charge ports that they have was 11,000. As we discussed, Tesla has around 30,000 plus now. They have 11,000. So I just want them to move faster, which I think they are. It's going to happen. These numbers are staggering. 200% year on year, it increased the fleet billing. Not the subscription part. This is like I think the hardware part. That's what they're talking about.
Yeah.
I'll remind you, we acquired VeriCity, a leading e-bus and commercial vehicle management provider. And we also announced the expansion of our partnership with WEX, a leading fleet payment solutions company. The partnership will provide fleet customers ready access to the largest EV charging network for en route charging needs and enable depot and at-home charging along with easy employee reimbursements. All these new companies are becoming legitimate energy plays, and they're acquiring the vertical stack that they need to control every part of that vertical, basically. They have subscription services. They're doing this e-bus, commercial vehicle management thing, and this WEX, what is it? Our partnership with WEX. I'm not sure what WEX is, but leading fleet payment solutions company.
Like almost like power on demand. And that's an interesting idea, that you can sort of bring power to the people where they need it. We also need to know what their competition is doing, right? You need to know what Blink is doing. You need to know what's the one in IKEA that
there's EVgo, there's Blink, there's a lot of them. There's Electrify America, but the thing is, there's Exxon,
Chevron, BP. Yeah,
I'm losing track, but there's how many oil companies are there? There's a lot. So there's going to be a lot of charging players, and ChargePoint is currently, I think, the largest in terms of having the number of connections, like the ports that they keep talking about. I would like to welcome former U.S. Secretary of Transportation and Labor, Elaine Chao, to our board of directors. That's smart. You got to hire the people who are connected.
That's the same position that Pete Buttigieg currently holds, and that level person would be on their board of directors.
Network Charging Systems represents our hardware vault sold with our cloud services solution. I have a EV home charger from ChargePoint, so I don't subscribe to these cloud services, but I did pay them the $600 for their actual hardware. So that's part of this business. Subscriptions include those cloud services. ChargePoint as a service offering is where we bundle our solutions into a recurring subscription and now software revenue. Q3 revenue was 65 million, up 79% year over year and up 16% sequentially quarter over quarter. Network Charging Systems at 48 million was 73% of total revenue for the quarter. So you can see that part is the biggest part of how they make money. And it was up 73% of total revenue for the quarter, consistent with Q2, and grew 111% year over year and 16% sequentially. So look, they're growing.
The difference between electricity and gas is a gallon of gas is a gallon of gas in any state. Every state has different regulations with respect to the cost of electricity. That's dependent by geography and or time. And so if you're managing a huge fleet of buses or vehicles, say a robo-taxi fleet, these numbers matter to you, especially if you're in multiple cities, because the money you're spending for the electricity can vary. And it seems to me that what they want to do is be a one-stop solution to helping companies essentially get all of that in order to save them money, get them power where they need, keep their vehicles charged, but also managing the pricing and all of the conversions.
Yep. Actually, a subscription service where they just pay them a monthly flat fee every month. And so they'll service those units. That'll cut some costs off the electricity that they're using. So they just want this recurring revenue no matter what happens. New York City, the electrified fleet that they have in the parks, they're all using Chargepoint infrastructure. This is happening. It's happening now, which is kind of amazing.
Theoretical question around site owners' decisions between level 2 and level 3 charging at places with like shorter visit times, like grocery stores, malls, parks, etc. The early conversations we're having, I think there's some split opinions on what the preference may be for future EV drivers. You guys offer both solutions, obviously, but have more of a presence in L2.
I want to correct this. It's L2. It's level 2 charging, not LTE.
Right. With new site owners deciding which route to go with, and if any existing level 2 customers are looking to expand but with a DC solution.
There's a lot of misinformation on this, and too many folks are pattern matching on gasoline. By way of fact, it's not an opinion. When you make the switch to electric drive, a depot is not your primary fuel anymore, meaning you don't wait till the little yellow light's on, go drive somewhere, fill up, and go home. That doesn't happen, especially if you have access to charging either at home or work or both, or street side parking. We've seen these driver patterns kind of dominate how people behave. There are always corner cases where people, certain percentages of the population don't conform, but they usually have outlier reasons for not conforming. So it is not as speed gets faster, you put it in. In fact, it's actually matching the natural parking duration and how much energy is expected to be reloaded in that stay. So if you're going to the grocery store near your house, you're not trying to fill your tank or your battery. You're not trying to do that. You're trying to avail yourself of some convenience miles you may pick up as an amenity by your grocery store. Now, if you pulled off a highway and you're on your way to a weekend holiday and you happen to pick a grocery store to stop at because it had a fast charger, you're doing that because you want to make essentially a refueling stop. So they're very different use cases, and they get conflated. The average shopper doesn't want to use a fast charger if they're in their local area. So and I'm not talking down one or the other. It's about matching it correctly. If you don't match it correctly, let's say you're that grocery store. If you don't match it correctly, you have a very expensive utilization mistake of the total construction cost and equipment cost versus the number of parking spaces and customers you can serve. So it's not a I got a real problem because I really made a massive mistake. If you plug in around town and you're just topping up, a fast charger is such an expensive proposition for that use case and consumes so much electrical capacity for that use case that you've made a mistake. But if you're well positioned to serve highway drivers as they're going out of their beyond their battery range, having a mix on your grocery store site between L2 for your local customers and fast for your long distance customers makes a whole lot of sense. So what we do is we consult with customers to try to help them understand how to allocate the right strength for the likely use cases that are going to present in that parking lot, because the number of parking spaces you can electrify with the electrical capacity and the cost of one fast charger is pretty significant on the L2 if you're primarily serving local clientele. So that's just some of the coloring. And it's so much different than putting gas stations up. It's just, it has no relationship to that legacy market at all.
Me and you were talking about superchargers everywhere. And he's saying you don't need superchargers everywhere. You just need certain L2 chargers and DC fast charging, but you don't need all of these DC fast chargers. So he's making his point why we're installing all these L2 chargers. So what do you think about all that?
I understand what he means. There's only so much power you can bring into a parking lot, and the amount of spaces that you can serve in that parking lot is determined by how you divvy that up. So if you have a bunch of level 3 chargers or these superchargers, you're going to limit the amount of spaces that you can serve customers, and you're also going to be at a higher price point. So if someone does come in to the local grocery store, local meaning you're right by your house and you're near your own charger, you just want to plug in and get a couple of miles, a supercharger is too expensive and they'll end up being under or not utilized, and that will be an expensive mistake, was his point.
You're not utilizing your space efficiently, that you shouldn't have 10 superchargers. You only need 1 or 2, and most of them should just be L2 chargers because you're just picking up some groceries and you're going back home.
It makes total sense.
I don't mind the level 2 chargers. It's like at a supermarket. I mind it because I've been to Chargepoint stations and I never want to use them because most of the time they don't have enough of these DC fast chargers, even on the highway. You're going to go and there's going to be one and it's going to be taken up or it's broken, and then you're out of luck, as opposed to a Tesla supercharger station where they're all 150 kilowatts plus, right? So you know you're getting great charging at any station. This is what I find a little bit disingenuous. He's giving a valid point for the supermarket case, but he's not giving the valid point because he's still not there even installing enough of these DC fast chargers. One of the main reasons I bought a Tesla, I know when I'm in trouble, I can go to a supercharger network no matter what, and in 20 minutes be gone. I can't say that for ChargePoint right now.
Right, but ChargePoint isn't selling cars.
I'm saying that if Tesla's network was open, everybody would use their network.
ChargePoint's just a delivery system for the electricity that's available. Like
the
you might want all level 3 charges. They just might not have the capacity. ChargePoint is not in the business of generating the electricity. They're only in the business of distributing the electricity. So if they come to a site, a Walmart, and they say, this is how much power we could pull, we can divide that up any number of ways. To him, he's looking at it like, I can sell you 1 level 3 charger at this price, or I can sell you 3 level 2 chargers that'll help you feed more customers. And for me, I'm selling 3 units versus selling you 1 unit. That to me makes sense.
It could be cheaper to actually install. So that's important for someone installing these things. Like, did I put a supercharger at my house? No, I put a level 2 charger.
Well, you can't. Residential can't get anything more.
But my point is that I needed to charge overnight. I don't have that need to fill up my tank immediately.
Most people that have EVs have charging at home. So when I go out in the day, I do not expect to charge anywhere. If it's there, it's a convenience. The only time that I expect to charge was on a road trip, because every other time that car leaves here 100% charged every day.
Well, this was my point, that they do have a problem with these road trips. So let's say you go to a place with 1 or 2 of these DC fast chargers, and it's broken, or one is broken and the other one is taken. All of a sudden, this is my problem, that they just need to put more of these. I agree with their model. I actually like it. Okay. Especially as an investor, they're trying to say you don't need 100 superchargers. You just need 3 or 4, and then the rest could be level 2. I get that.
Right. But even look, aside from that,
the way it's practically working now is that there is not enough at each individual station. That's my point, that they just need to be a little bit more gung-ho about this and increase the level. Even if it's having an additional 1 or 2, they just have to be a little bit more of that.
That's assuming that that's part of what ChargePoint's responsibility is in the negotiation that they made for that charger. You know, like the ATMs that are inside of like the 7-Eleven, it's run and it's serviced by a separate company. If the machine breaks, it's up to the company to come go get it, because they don't make money unless people can use the ATM. But if you're buying the ATM, in this case, if you're buying the charger, then that's the end of ChargePoint's responsibility to you. If it's broken, then that's a service contract that they should charge money to come out and fix.
They do, by the way. A building or someone can take on these chargers and basically put them in their installation, but ChargePoint makes a profit somehow, like either maintenance or a contract.
Like, I'll give you the chargers for free, and we're going to put them in there and take 10% off of everything. Now now there's an incentive for me as ChargePoint to go fix these devices. If they're broken, I mean, how do we know that those weren't bought outright? And like me at my house, I could have a broken charger at my house, and they're not going to come fix it unless I say, hey, the thing's broken, come fix it. So there's a lot of ways that charger could end up at that place. And without knowing the specifics of that, I don't know that you can hold it against them that there's some that are broken, or that they may need more or less. Maybe the customer didn't want to buy more.
You do bring up a valid point that their business model is that the customer decides what chargers they want at their location. That is true. So as opposed to Tesla just says, we get this piece of land, we're going to put 10 superchargers. That's our land. We're renting it or whatever.
Yeah.
ChargePoint has to ask their customers, how many of these do you want? We recommend A, B, C, D. So I agree with you there. It's a different business model. So I'm not giving leeway for that. But still, I'm saying as just a customer and not caring about the specific dynamics of the business they're going to, I just want to go there, fill up my car, not worry about that this thing is not working the way I want it to. That's all I'm saying.
Well, I don't either, but that is not something that I think reflects anything on the company.
Well, it does, because then it makes me as the customer who doesn't care about that other business. I don't care how they run and have the relationship with ChargePoint. I just want to fill up my car. It does matter. ChargePoint still has to go make sure that their products are the best and that they fix them in time, because otherwise it's bad on them.
ChargePoint might not even be aware that it's broken.
Well, hold on. You're telling me in the day and age, their systems are connected to the internet, by the way. You're telling me ChargePoint doesn't know when something doesn't work?
I had an Enphase inverter that was out and no one did anything about it till I called my guy and said, please come fix it.
I know, but I'm saying there's an app that says it's not working already.
I had Enphase inverters. They work great. The app was telling me it wasn't producing. I didn't get an alert. It was just me going in there looking and seeing, oh my God, that one's been down. Enphase didn't alert me that one of their devices was broken, but I don't hold it against Enphase as a company.
When my system is not producing a certain thing, Enphase alerts me, your system is not producing. There could be a problem. And usually it's snow on the roof.
If it's covered in snow and it knows what time it is and knows the sun is out and is not seeing anything, then it's going to trigger a warning. Mine was one panel, right, and wasn't producing for a few days, but it wasn't an absolute failure like what your system is detecting. So I agree, it's not a good look when these chargers aren't working, but I can't hold it against them as an investor because I don't know the details of that arrangement.
Well, hold on. That's exactly when you can hold it against them because you're investing in the company. And if they're not taking care of properly working out these contracts to service these things and include enough chargers saying, look, this is bad for the network.
People sometimes don't want to pay for
it. This is bad for the network.
I know, but people don't want to pay for it sometimes.
Well, I agree there. That's true.
So it's not, you cannot hold it against them. Or some people don't go and look at the app. I mean,
to me, you're only giving me a more bullish scenario for someone like Tesla, which knows it's broken and has service people ready to go and fix it almost immediately.
Right, but Tesla's leasing the space and putting them up themselves. I would expect that they need those superchargers active because that's what's paying.
But by the way, ChargePoint does install their chargers as well. You're giving good points in terms of, yes, ChargePoint isn't always responsible for like certain chargers being down, but it's their network. They have access to everything connected to the internet now. They know when something is down.
Sure, but what? Okay, but
it looks bad. It's a bad look. Hold on, it's a bad look for them. That's all I'm saying, guys. We're gonna have special videos
on the Discord server. Go out there every time you see one that's broken on the ChargePoint channel. Just go and take pictures and let's see how many you can collect.
And in fact, I will go out of my way now. Forget about Tesla superchargers. I'm not going to use them.
All right, let's see. I did the supercharging experience, and most of the time, if I went to the mall, I would probably just park in the standard level 2 EV chargers that they have.
Blink or something?
A Blink or one of those. A couple of reasons. Number one, most of the time, that's really the only power that I need. I'm just trying to replace what I've used in driving around for the day, number one. Number two, those parking spaces are usually right next to the front door. The superchargers are all the way in the back. They're like across to the other side, and I'm not going to walk all the way across to go to a quick thing in the supermarket to come out with groceries. I'm going to park right in the front space. The other thing is the cost. Most of those are free by me. They're just free.
Oh, really? I don't have any free energy
Most
at
of them,
all.
they're all free. And now, especially, I'd say that in this last year, they're almost always taken. A year or two ago, when we first bought the Leaf, we were like the only ones there. Just drive up to any place, plug your car in. It was amazing. We got like 1 year out of it. Now they're mostly full. Unless, like the CEO was saying, unless you're coming off of a highway, most of those people drove from a car that was plugged in at home. It's basically fully charged.
Right.
It's just a courtesy charge to give you a little bit. So you only need level 2, regardless of the car. And
you're bringing back going to shopping and restaurants. I'm not arguing with that. Level 2 is fine. In fact, I don't even think you need it because I charge at home. The only time is the trip on the highway where you stop at a Tesla supercharger and there's 10 of those, and you stop at a ChargePoint and there's one of them. That's where the problem comes in.
That is assuming that ChargePoint made the decision of how many of those chargers.
I know you're bringing that back. It doesn't matter to me as the driver. It's just that part doesn't matter.
We're not talking about the driver. I'm talking as the investor. That's their product. Of course, they would put 100 of them in every facility and make the money on the revenue.
Well, they wouldn't. The CEO, we just went over. The CEO said you don't need that.
No, he's saying you need more level 2s versus level 3s. He wasn't saying you don't need don't need level 2s. What he's saying is try to get as many of them out there. And look, the argument he's making of maximizing the available electricity makes sense. But it's also good for him because he's selling more level 2 chargers, right? Instead of selling you 10 level 3s, he's selling you 30 level 2s. He's making
30
money.
service contracts.
And contracts.
So there is a bullish thing there.
That makes more sense.
My point is
money, if he's making money on the electricity, you're going to make more having a bunch of level 2 charges in parallel than you are going to have with 10 of these level 3 charges. The supercharging
I'm not arguing the business case for him. I'm saying as a user, which you have to always think about the user, that if they drive up to whoever owns this charging network for ChargePoint, doesn't matter. They're coming away with a bad experience, which means as investors, which we care about, we don't want that person to walk away with a bad experience.
Hotels are a great example. They have a conference room. They have 3 or 4 Dells there, and you can rent them by the hour to get some access if your internet's not fast. The maker of the computer sitting in that room is ChargePoint. In this example, ChargePoint is selling someone a device that they're going to put on their network, just like this company bought 3 Dell computers to put in this hotel and rent to people. When I go in that room and the freaking machine doesn't work, the Dell computer doesn't work, I'm not angry at Dell. I'm angry at the hotel. Why are you renting me this computer and not maintaining it? I know the computer can work. It's obviously you guys aren't aware that it's wrong.
I download their app, not the computer that you went into the hotel and you did that. I download their app.
Right.
I put in my credit card information and give it to Chargepoint. And then they say in their app, okay, go here, go to the supercharger. I go there. It doesn't work. As an end user, who am I blaming? Are you honestly trying to negotiate this out?
I have that exact,
who am I blaming?
I'll give you an example. That exact problem happens to me at the IKEA in Burbank. There's 3 Blink stations there, and they almost never work. Do you know why they never work? They don't work because of internet access. The machine works fine, but internet access is really crappy where they're installed underneath the parking lot. No one has any cell service there. So it's really hard to get connected to it. So the only way to do it, and literally the only way to connect to these 3 Blink stations, is to go on the machine and it asks you it says, this is the code for this machine. So it's like HVX45. That's the individual ID of this machine. Then you write that number down. You walk like to an area where it's open, and you get on 1 bar of internet to get the code that says, you've paid your credit card, type this code into the thing, and it'll say, okay, you now have a credit for whatever. And that's literally what everyone has to go do, is like walk away from it. Now, it's not their fault. The machine works fine, but the way that the building is structured, the internet doesn't work.
But by the way,
no charge is going to work there.
We're not talking exactly. They actually have, I think, a slightly different model. They own the machines. Blink is responsible for the whole infrastructure. I don't think they're selling it the same way Chargepoint is, which is, to your point, Chargepoint is selling it to some target.
Well, Blink has an app. I mean, there is a Blink app.
But they have a different business model. That's my point too, that I believe, we should double check this, but I believe their business model is also different. So it is Blink's responsibility that their thing isn't working, that you're having a bad experience. That is not IKEA's responsibility.
Right, but my point is, like what he said is, these things do not operate like traditional gas stations. The gas station doesn't need an internet connection, man. So it's just a fundamentally different way. Even though it's providing the same function, it's an electric vehicle. So there's a whole different infrastructure. It doesn't come out of the ground. There's no tankers that come in and refill it. It's all about capacity and whatever the grid can support at that time. It's also about internet access. How do you know that half of those Chargepoint chargers that don't work, it could be an internet problem? It might not even be anything. It just literally can't communicate.
Once again, I don't know that. I'm agreeing with all your points over there, except the one that, as an end user and as an investor, an end user goes and has a bad experience. That is bad for the investor, because he's going to tell his friends, I don't trust Chargepoint.
But what I'm saying is there are other factors outside of that point of sale that affect the way that EV charger is going to operate in that space. I'm not saying that every single Chargepoint charger that's broken is the fault of the people who either bought it or whatever. But I'm saying is we don't know, because you can't see that from the outside. What I can say too, another point to make is they have been around for 10 years. When a lot of these first chargers went out in the network, there wasn't that many EVs. So maybe a company only bought one. This could have been Tesla pre-2020. You saw maybe 2 or 3 of them on the road a week. Now you see 2 or 3 every 10 minutes. Let's get 1 or 2 and see if these things even work. See if anybody even wants these things.
I mean, you know that if anyone is not keeping up with this in terms of this whole infrastructure thing, it's like not keeping up with Tesla in terms of their autopilot and all the things that they're doing. It's like, you know who the winner is at the end of this. So like, my point is, if I have back to the investor mindset, if I have $1,000 and I know that they have these problems, I'm just saying that it doesn't make me want to just dump a bunch of money into them, because I see that they have these problems. Not that they won't solve them, just that I see an easier way to make a double than trying to fix this guy, right? I don't want to fix Chargepoint.
Right, but if you put
I want Chargepoint just to make me money.
Right, but if you put $1,000 in the Chargepoint, you're not looking for $2,000. You put $1,000 in the Chargepoint because you see
a 20x.
You see the $6 billion and you say, look, if they can just survive and keep their name in the same sentence as Tesla, there's Tesla, Chargepoint, Blink, maybe one other. If that becomes the new charging infrastructure of tomorrow, they're going to be a $200 billion company.
Well, okay, so now you're talking my language. Yes, there is a smaller allocation that I would definitely put in for that what if. I'm just bringing up the problems, obviously, that can happen by investing in Chargepoint. It's not all roses. That's all I'm saying.
But there's a flip side to it. You're not going to get the price gouging that you're going to get on the gas side, even though on the gas side, you'll get the convenience all the time.
Yeah, if we're arguing that EVs are better than gas stations, sure.
It's way better. No, it's way better. So
Obviously.
even your worst experience at the charge point is going to be better than what you would deal with long term from the gas station. And like I'm just a little bit more understanding. I'm understanding what they're trying to do, especially the way the guy's explaining what the business is, and understanding like he's got some conflicting things. You want to sell more units, but you want to please the customers. What's the right thing to do at this point in the company? It's a tough spot to be in. If 100% of the cars sold were EV, it would take 20 years to replace the install base of cars that are in North America, Europe. That's how big this market is. Okay.
So I want to clarify, right, that is such a big market that even if all the EVs tomorrow, that's what he's saying, tomorrow we're all sold, all EVs, forget about ICE cars. He's saying it would still take 20 years to replace all these ICE cars off the road. That's amazing. That means he has business for 100 years because that's not going to happen tomorrow.
I'm gonna
You're
call that one out.
advocate.
I'm gonna call that one out. Here's why I'm gonna call that one out, because he's talking about the install base of EVs. What I would want to know is how long will it change to turn over the charging infrastructure? Who cares about the number of EVs? One charging infrastructure is going to serve millions and millions of EVs. They're going to come in throughout the day. So it's not like every single car sold is one car charger.
He's saying there's so much business out there. I agree with him. There's so much business out there that we can't even handle it right now. There's just no way to do it.
Okay, I could see that, but I also see like this EV movement and this new movement. It seems like everything's just becoming decentralized. Gas stations need to exist because you have thousands of gallons of gas that need to live in one place. You don't need that with an EV infrastructure. You need like what Tesla has, 10 here, 10 there, 10 there. Maybe you have one big one that becomes a hub, but that's going to be more of like restaurants and a destination. Like Mark was saying, an FUV park where you can charge and hang out with the kids while your car's charging. That's what gas stations, the way we know them, are going to be in the future. And I think there's going to be much less because now it's not going to be this one big pit stop like where everyone has to pull over. It's just going to be all along the road. So it's gonna sort of spread out like the business that you normally see at like one big intersection. You'll probably see some of that at big intersections, but along the road now, you're gonna have charging stations all along the road. I mean, if you had a business that was
you're
off the
agreeing with
highway,
him, by the way, just so you know, you're agreeing with him. He's saying
Yes.
it's such a big opportunity.
Yes, but what I'm calling foul on is he's talking about the number of EVs sold, and what I want to hear is how long would it change to transfer over the US charging infrastructure, and how much of that do you expect that you could get? Because now that it's decentralized, it's not just about like all the Exxon locations and the mobile, Exxon and Chevron locations. It's literally anybody with a big enough parking lot and some overhead on their grid can buy a couple of these and put them in, regardless of where you are on the highway.
He's just pointing out that there's so many EVs to even make that we're nowhere even close to having a transformed charging infrastructure. So he's saying, I have a lot of business, dude. I can't tell you how much I have, but it's infinite at this point.
Yeah, I could see that. But I mean, we've never had the ability to fuel our cars at home.
No, it's amazing. And you're
So
right.
it's like,
But when I drive somewhere, just like you're
business-
saying, you even said just 5 minutes ago, you go to a restaurant, you do this, like you plug in right in front of the thing. So are you now reneging on?
No, I do, but like say 80% of the money that I was paying ExxonMobil or Chevron, I'm now paying to the electric company. I'm not paying it to any company. It's going to like the electric company. The 5 or 10% that I park outside, I'm either paying a Tesla at a supercharger or I'm paying, Blink. But I mean, it's literally like when I go to IKEA. So they're getting a much smaller piece from me anyway on the commercial side. And even the home charger,
the
they're not making any money past the sale.
The fact that they're selling electrons, at some point, electrons could be made for free. Let's face it. Eventually, energy is going towards zero. But while it heads to zero, and these people do install solar panels or whatever else, wind generation, they're literally making money on what will eventually be free. And they can do that in perpetuity because as we still drive and we go to different places, we're still going to need to charge. And let's face it, the economy is not going to go away. We're still going to pay for things. So even if they're making it for free and they built all the infrastructure, they don't need to go dig out any oil. They don't need to drive any trucks to dump a bunch of fuel anywhere. So they're making, seems like high gross margin at some point. Not yet, but 10, 15 years from now, it's probably like 50% gross margin, 60% gross margin.
I could see like an ideal curve for them is where they get a really good commercial base installed to bring in that reoccurring revenue. And then you start selling people the individual units at home. And that's it. It's just a one-off sale. But then when that person goes out, that person who's at home with the Chargepoint was going to look for the Chargepoint charger because they're familiar with it. Or if they can give you some sort of incentive, right? What if they made it cheaper for you if you had a Chargepoint charger at home and they know you because you have an account and they go, oh, we'll give you 10% off on all Chargepoint chargers across the US. That's like one of those like cash back on gas or whatever it is. That's an incentive that they can offer.
Oh, that's going to happen because they run the network. As I said in the previous discussion, they run that network. They will do that, what you're saying. And that's a great point. I'm just saying they need that better infrastructure for me to want to go to them in the future. And they will have it. It's just a waiting game now. I don't know if it's 2 years, 3 years, 5 years. Chargepoint is going to be a massive, massive company. And they're worth right now, what do we say? How much was it? 6 billion?
$6 billion.
They're one of the ones that I think will succeed. And this 6 billion will seem like nothing. In the meantime, we're going to have to wait. And it's going to stick at this price. Okay.
All right. So guys, hit like and subscribe if you like this, and hit the notification bell to get notified when these things come down. And again, we'll put a link to the Patreon, the merch store. If you like watching me and Vitaly fight over stuff, we'll be fighting over our new stock tomorrow.